This is not a good idea. But upgrading your home with amazingly low interest rates and fantastically low prices is a good idea. Justin Critchfield here with RCI Realty, RealDealUtah.com, and the Critchfield Group. Today we're going to be answering a question that I've been getting quite often. I've had people say, Justin, I want to take advantage of great rates and low prices, but the problem is I have a home I need to sell, and I owe more than my home is worth. What can I do? Is there a way I can buy a second home? And that's a great question and great idea, and if you can pull this off, it's going to be worth it, because when the market does go back up, you're going to love it, because you're going to make a whole lot more equity, and you're going to be able to take advantage of our prices, and you're going to have two homes that you can sell for a profit. So to help us answer this question, let's talk to one of our preferred lenders, Craig Woolston. Craig, why don't you give us some of our lending options?
All right, Justin, there's two options I want to talk about. First option is see if they can keep their current home as well as qualify for a new home. For example, let's say a borrower makes $6,000 a month and their current mortgage payment is $1,200. They could qualify to buy a home for as much as $320. That's assuming they have no other debt. But let's say they have $500 a month in car and credit card payments. They could still qualify for a new home in the 250s. And our second option, if you can't qualify for both mortgage payments, you're going to need to find a way to rent out your current home. That means move in with family, friends, or just rent a place of your own. After 12 months, you can use 75% of that current rent towards your income. You now can qualify for that new home that you've been looking for. To help you understand what that means, if your current mortgage is $1,000 and you rent your place out for $1,000, after 12 months, you'll get $750 credit to your income. So now, if you make $3,000 a month, you'll still be able to qualify for a $200,000 purchase.
As you can see, if you can qualify for both, great. Rent it out. If you can't, then you can possibly rent the one, move somewhere else for a year. Doesn't matter where you move. Show that rental history, and then you will be able to buy. It takes a little bit of sacrifice, but trust me, in a year from now, prices are still going to be low, and rates still should be relatively low as well. So you'll be able to take advantage of that, especially for growing families. If you know you can't stay there for 3, 4, 5 years from now, you're definitely going to want to look into this option. Let me tell you about one other option that you have. First of all, it's called seller financing, and for some people this can be scary, but we can design it so that we protect you. And the advantage of seller financing is we can usually get you anywhere from 5 to 10% more for your home by doing a seller financing. The reason that is 1/4 of Americans don't have credit good enough to buy a home right now, so they are willing to pay that little bit extra higher price to take advantage of, again, fairly low prices for them as well. So how that works basically is we find a buyer for you that is needing a seller finance. We have them establish a price, obviously, which, let's take example, a $200,000 home. That's the price, and normally they could buy this home maybe for $180,000, $190,000 in today's market, but since we're offering seller finance, we can get it for you for $200,000. That's the price. Then we issue a term. How long is it going to take for them to buy this home free and clear from you? That's anywhere from 1 year to 5 years. The next thing we got to establish is their down payment. We try to get you as big a down payment as possible. This is non-refundable money that goes straight to you. On average, it's about 3.5%. Down payment goes straight to you. You can cash that check in the bank as soon as it closes. But obviously, we try to get you as much money as possible. So, if there's someone doing a bigger down payment, that just creates more safety net for you. And then last, we got to establish a monthly payment. We try to cover your mortgage at least, and if not, exceed it so that you can be making a little bit extra cash flow. So seller finance will work the same way. Sell it on a contract to them. If they do buy it, great, you get today's higher price. But if they don't buy it, several years later, then you got to take that house back and either find another seller finance buyer or rent it out. But it will allow you to get into another home with a rental history on there. So guys, those are your options. One last thing to tell you, if you do have a higher interest rate and you are underwater on your home, there are programs that you can refinance up to 125% of your value. So you may want to look into that. That may give you the cushion so that you can buy another home, so that your monthly mortgage payments are low enough to rent it out. So hope that helps, guys. Have a great day. Contact us. Every situation's different, and lending rules change all the time. So when you're watching this, depending on the time of year, call us, because rules might have changed and you may not have been able to qualify before, but they may have loosened lending guidelines and you have. So contact us. Let us know your situation. We'll be able to tell you. Thanks so much, guys. Have a great day.